Welcome back, Cowboys and Cowgirls, to the Network Marketing Cowboy channel, where we talk faith, freedom, and financial independence. I got a very special guest on today, a good dear friend of mine, Danielle McElroy. She is a realtor, she is an investor. She knows what people need to ask and look for, and especially in their first investment opportunity. So, Danielle, give a little brief bio on yourself.
Yeah, so my name's Danielle McElroy, and I've been a real estate investor for a little over 10 years, and I've been a realtor for about 2 years. And real estate's my passion. I love everything about it. I loved getting deals for myself, and now that I'm helping other people get deals, it doesn't even feel like work.
And not when you do what you really like to do, that's for sure.
Yeah.
So, for a first time person wanting to buy their first rental property, how do they go about finding a realtor that will understand them and kind of walk them through the process? Because you cannot just go to any realtor and think they know what investors are looking for. Most realtors are just looking, this is a home that you're going to buy and live in, not invest and try to cash flow, because it's all about the cash flow.
It's funny because I think who people use as a realtor, they really discount. They like want to find the right property, but maybe they have a friend or they met somebody somewhere that's a realtor and she was really nice or he seemed really, put together. So that's who they want to use. But that's really not the right way of going about it, because who you use as a realtor for so many reasons is so important. It's just as important as the investment itself. And a normal realtor, most realtors traditionally work with home buyers. So I would say most realtors work 100% with home buyers or 90% with home buyers. And it's very different being a home buyer versus an investor. Because a home buyer, you're walking through the kitchen, you're like, this is super cute. Your kids could eat breakfast here. We love the neighborhood. The neighbors are really nice. And that's all good and fine, but that's not an investment. And so when I get people that have worked with a traditional realtor and they're switching to me, they're like, if I heard my realtor say this is cute and that's cute one more time, like I'm going to blow my brains out. And that's the truth though, because what realtors do for home buyers is, do you like the home? Do you want to live in the home? Do you like the area, the neighborhood? What I'm doing is I'm looking at it from a tenant point of view, from an investment point of view. Is this where tenants want to live? What kind of tenants are you going to get in this area? What kind of rents are you going to get in this area? Is this an area that's going to have rent growth? Is this an area that's going to have rent decline? What's your competition? Like I go online and see, comps in the area. Is there a ton of rentals listed that have been listed for 50, 60 days? Or is there hardly any rentals listed and they've only been listed for 10, 30 days? Very different. So you're just looking at different things. You're looking at, the what makes sense to cash flow, and traditionally it doesn't have to just be putting 20% down. Sometimes you have to put down more, but at the end of the day, you're still looking at the numbers versus looking at, do you like the place? And even a lot of times with investors, they get into that home buyer mode. Like, I know you said that this is a good deal, but like this place is so cute and it's so like I could see myself there. And I tell people, I go, well, you have to like the investment property you're buying, but you have to get out of the head of, would you live here? Because you're not the one that's going to be living here. It's
You
going
have
to
to
be your
disconnect from
tenant.
the emotion point. I mean,
Yeah.
too
Yeah.
many investors buy on emotion and not numbers,
Yep. But
especially
you
the
still
first
have to
time.
like it. But you still
Yeah, I
have to
mean,
like it. Like you can't like in my experience, unless you're just really, really, really down the investment, if you hate the property, you shouldn't buy it. If you hate the area, even if the numbers are penciling out, like you have to be bought in. You have to like it. But to your point, it can't be emotional, because I've seen investors make decisions that weren't that great because they got their emotions in the way.
yeah, and especially for first-time investors, they're not
Yeah.
used to walking that thin line of, do I like it? I like the area, but they're taking themselves out of wanting to live there. They're looking at the bigger picture.
Yeah. And two, a lot of times with first time investors, they're trying to buy the cheapest thing. So I just dealt with somebody last week where he's trying to buy a foreclosure. We put in an offer with the bank that they did not accept, so the numbers didn't work. But I found another deal that was like 100 grand more that was actually a better deal. It was an assumable loan, like 3.5%. And he's like, no, I don't want to spend that much money. Like, I'm not trying to spend that much money. So people get really wrapped up in this money piece, which I understand. But if your rent is going to be covering the debt, then it really doesn't matter because you're not going to be paying it. Like, you'd be better off buying something 100 grand more that was
Mhm.
covered by the debt than 100 grand less that you're coming out of pocket.
Yeah, and I mean, and if it's in a better area, better deal, that's going to appreciate that you're going to be able to do long-term renters in that building a lot better than another area. It's all going to pencil out in the end of this is a lot better deal. Now, I mean, it comes down with the down payment of that time of if they have the money, but if you have a good deal and you might be short 10 or 20 grand, you, if you go out and start looking in the real estate investing network, you can probably find that extra 10 or 20 grand to come partner with a minority deal, somebody in that just to get that deal. Because if it's a good deal, you can find people to invest with you.
Absolutely. And you don't even necessarily have to go to a real estate community. There's so many people right now that are sitting around like, what do I do with my money? It's all in the stock market, or it's all in gold, or it's all in real estate. And I want to diversify. And there's plenty of people that have 10 or 20 grand. And to you, it might seem like a lot of money, but to other people, it's just like a different way for them to hedge whatever they're investing in.
Yep.
But you have to be able to show them the numbers. You can't just say,
You have
you
to
have to
have
be
it
able
all
to,
penciled out and
mm-hmm.
what is going to be their split. When are they going
Yep.
to get, that stuff? How much equity are they going to get into it? So when you do eventually sell it and upgrade it or whatever, or refinance, what's their portion? So you have to make sure you're educating yourself to really understand of how you're going to structure the deal for, a partner that's not going to be really involved.
And you have
Um,
to have exact numbers, because what I
yeah.
see a lot, Rocky, is people are like, I don't want to talk to a lender yet. I'm going to ballpark, my rate's going to be around, 6.25 it's like, no, you need to talk to a lender because we need an exact number, and you certainly need an exact number before you are going to offer it to anybody else. Because when you do these ballpark numbers that you pull off ChatGPT or the internet somewhere, like, those aren't your number. And if your number
Yeah.
goes up a quarter point or a half a point or down, then you have a totally different situation.
Yeah, and so why you're, looking for properties, this is why it's so important to you to be growing your network of people that may want to invest with you to do this. This is a whole part of my ranch method of your network marketing leverage. This is just not in my network marketing business, because there's people in my network marketing business that just use all this residual income that they're making through their network marketing company and upgrading their lifestyles and not really building long-term wealth. I educate them and then they can come into deals with me. So this is how you can really build your network, and you have to educate them along the way or point them to the resources to educate them.
Yeah, it's really important who you know. It's all about who you know and who you're working with. To your point, you can't just work with anybody. You can't just invest with anybody. That's why those relationships are so important.
Yeah. So, I mean, that's the first part of that. What other things should a first time investor be looking for in a realtor?
So I think they need to own, or I don't think they need to own rental property.
They need to be an
You
investor
can't.
like you, so you really understand that.
Yep. And it can't be their husband and it can't be their wife. It needs to be them. They need to be an investor, and they need to, not just a homeowner, because it's different. Because,
Mhm.
it cracks me up when people hire realtors that don't even own homes. Like there's so many realtors out there that don't own anything.
Or
Okay.
just
So
renting.
yeah, they're just renting or living with their parents or whatever. And it's like, how are they going to know to tell you, oh my gosh, this work up here, this is super expensive, because I've done this before. You have a crack in the wall, this is what you're going to have to do. Or, you have a HVAC issue, this is how expensive this is going to be. And yeah, you can bring in professionals, but when you're just looking at little things as a whole, how is someone that doesn't even own a home going to help you? But then on the
Mhm.
flip side of that, on the investor side, how is an investor going to help you? Because you're not going to repair your home the same way as you repair an investment property. You're not going to, flip a home as the same way as an investment property. So like I just walked a condo with a client yesterday, and we're looking in the floors. Like I know the floors are going to be about 6 or 7 grand. How do I know that? Because I've been getting floors in all my places. I also have the contractors that are do it. We're like, those little things help, because as you're walking through and you're like, oh my God, this place needs so much work. I'm like, no, it just needs floor and paint, and it's less than 10 grand. You know what I mean? So those kind of things really can help, because you need someone to guide you, and you're not going to get good guidance if they don't own rental property.
And going back to just like floor and paint, the of how the home is, you need to take your personal taste out of how the home is kind of set up. Of, oh, I can't stand this flooring, I can't stand this paint job, or I can't stand how this bathroom is laid out. I know we talked about you have to like the home, not, you don't have to love the home, but you have to like the home. But you have to take out, yeah, I would not ever live here, because this is again about the tenant that you're going to be putting in here. Is it a livable space? Because most tenants, if they can afford a home, they'd be buying a home and living in it.
Right.
If they're a tenant, they're they need to find a home to live for either themselves or family. My sister-in-law just rented hers out to a family that they had to move because they were living in a two-bedroom apartment, and they had a new baby that was going to be coming. I think June 5th is the due date, and they wanted to be in the home by June 1st. And so, now they got a three-bedroom home, all this stuff, because their family grew, and she was able to, it's like, well, this is my price, this. They liked the area. It was close to where her family was. All those things matter. And then Kathy was able just to rent it out to him, and get like, okay, you guys have to handle all these repairs. I'm only handling all the major stuff, blah, 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 and was able to do it. So those
Yeah.
things really matter.
Well, and you have to take your own, like you said, your own personal style, but also the trendy stuff. Like if we buy a home and it's trendy and it's on par, that's kind of fine. You just know when the trends are over, you're going to have to repaint the cabinets or repaint the walls. But people come in and they're like, oh, light green cabinets are in right now, so I want to paint all the cabinets light green, and it's like, no, because you're trying to save yourself maintenance later
Mhm.
and expense later. And yeah, those cabinets might be trendy for the next 3 years. So great. One tenant stays 3 years, but then when you go to re-rent it, everyone's going to be horrified by the light green cabinets or the, gray walls. Like you just kind of want everything very basic, because when people move in, they also say, oh, our couch doesn't go with the walls. Like tenants, weirdly enough, do care about that. They want their place to look nice. So like you keep everything white, you keep everything neutral, whether it's in style or not, that just kind of goes with everything. You don't want to be trendy. It's not the place to be trendy. This isn't your house once again.
Yeah. So as an investor now, we kind of talked about the realtor. As an investor, what advice would you give to a first time investor, of what they need to do to make sure they're ready to make their first purchase?
So your first purchase is really important, because it's gonna, you're either gonna keep doing it or you're not, based on your first purchase, how good or bad that goes. What I see a lot, and this has changed the last few years, but people, certain cities are very expensive. So I'll just use Arizona as as an example. So like everyone wants to invest in Scottsdale, okay? But you might not be able to afford to invest in Scottsdale, because a home here might start at 550 grand, So So what people tend to do is they're like, well, I'm going to get a condo in Scottsdale versus a house in, let's say, outside of Scottsdale, let's say Tempe or Phoenix. Okay.
Mhm.
The problem is, and this is, I'm seeing a lot of investors make this mistake, is these HOA fees are killing deals. So you're buying into a condo that has an HOA fee because you want to be in the best area, which I get it. And it will rent. You know, if you buy in the best area, it will rent, but you have to calculate in this HOA fee, and it kills so much of your cash flow. And that's going to keep going up, whether rent goes up or not. Like your mortgage might be fixed, you know, but your taxes, your insurance, and then your HOA fee are going to keep going up. So for me, I'd say with investors, be careful of HOA fees. Small HOA fees are fine. Like some house neighborhoods have HOA fees that are like $100, like not worried about
It's
that.
keeping
Okay.
up the landscaping. You know,
Yep. It's keeping
condos,
it looking nice.
the condos you have to be careful with because, you know, they have major expenses of like if there's a pool, they have to cover a pool, roof repairs, outside walls, everything, you know, because these are common, you know, like an apartment complex where, you know, they're differently set up where the HOAs are responsible for so much more. So, you know, and I've seen that because I did live in a condo before, and that, you
Mhm.
know, in the 3 years I had that condo, it went up a couple $100.
Right. A month.
Yeah, a month,
Yeah.
not a year, a month. And, you know, and my stepdaughter, she has that now, the same condo, and guess what? It's in the 3 years she's had it, it's gone up another couple $100 a month since I had it. You know,
Yeah.
so it financially will cripple a renter if you're forcing that renter to pay that HOA. If they're thinking they're coming in here and they're getting $1,000 a month rental, and next thing you know, it's $500 or $600 on top of that because of the HOA fee.
Yeah, well, and you know this as well as I do. You can't make them pay it. So it's like, you know, they're not going to just up your rent doesn't just up because your HOA upped. You know, it's all
Mhm.
based on comps. And, you know, so what we saw the last few years is we saw rents decline slightly and HOA fees go up. So that's hitting you doubly. So like I said, be careful of condos. Like I'm not, I'd rather see somebody get a home in a less nice area, not a bad area, just a less nice area
Yeah.
that still rents well, than a condo in like the center of town where you want to be because that's what they can afford. So you really need to be careful on those HOA fees. Like I said, as a homeowner, a couple $100 a month maybe doesn't bother you. It's like whatever, I can afford it, no big deal. But when you're starting to look at your cash flow and your cash flow, you know, is 800 a month and all of a sudden it's 600 because of your HOA fee, like that starts to get really dicey, you know, like it really starts to eat into it and you
Yeah.
can't control it. So that's one. The other thing that I would be careful of just on a property basis is solar panels. Solar panels are very popular in the South and the West, and you need to be very careful about solar leases because once again, they're fixed,
Those
but
leases
they're
are,
like well, they're like $300 and $400 a month a lot of the times. I mean, I've seen some that are only $50, but they're really rare. Usually they're $300, $400. And the spiel that you might think is, well, I'll just tell my tenant that they need to pay this or part of this, but then it's going to save them on their energy bill. Well, wake up because the tenants, they're not buying into that. So if you tell them the rent's 1,200 and then there's a, you know, $250 solar panel fee, but don't worry, it's going to eat away at your energy cost. They're just not going to, they're not going to rent with you because they're going to look at it as a 1,450 cost. They're not going to break it down because you can't guarantee them that it's going to help their energy bill. The energy bill is not your problem. Like normally your tenant's energy bill, not your problem. They can be really conservative with it. They can go crazy with it and then they just pay it. Well, now you're trying to convince them that they're going to save money and then they're going to be mad if they don't, and they're just not going to rent your place. So it just, solar panels for me are like a no-go, you know, cross it off the list, unless maybe there's a year or two left of the you know, the deal and you're getting a really good price on the unit. I wouldn't even consider solar panels. And so those are the two things there. And then you have to just look, it all really comes down to area and layout. So I always tell clients, you can't really change the layout of a house. Like you can, but it's not practical. And you can't change the area. So you need to make sure the area is a place that tenants want to live. and where your tenant base in your area wants to live. And then the layout needs to be very functional for a family, or a person. I've actually had luck on 2-bedroom, 2-bath homes in Scottsdale because it's such a city center. But I'd say if you're going away from a city center, you probably want to do 3-bedroom.
Yeah. And so you have to really understand who your target market is going to be for
Mm-hmm.
renting when you're going into the rental. So, I mean, you're from Ohio and it's a totally different market from where you grow up to where we are in Scottsdale. I mean, Scottsdale, a lot of young professionals, and this is why the 2-bedroom places can go very nicely. But if you're someplace that's more family centric, you need to be able to focus on, are you going after the starter family that,
Mm-hmm.
maybe can get away with a 2-bedroom until they have their first kid. Then when they have their second, they're probably going to be moving, so you have to really understand what's that little niche that you're going to want to, possibly do your first deal in.
Yeah, and you really do. I've had a lot of success with, young people, they stay for a year or two and then they move. That's just what they do. But, there's a lot of, in more expensive markets, there's a lot of like single parents that are looking for something smaller. And then in markets like Ohio, there's a lot of bigger families. So you have to look too, like, are you in a big city where, it's like a lot of single parents, or maybe people have one kid, maybe two? Are you in a market like more in the Midwest where you have large families, 3, 4 kids are pretty common? Because then you're going to want, bigger homes. But at the end of the day, you don't want a home that's too expensive, Rocky. This is the other thing that people get turned around on. So sometimes people say, okay, I want to buy a home that's really nice and really big and really spacious for a rental for a family. But rents cap out, because to your point, if they could afford to buy, they would. Most people. I
Mhm.
mean, there's, of course, you're going to have families that have doctors and they travel and they want to rent this great house, but most people would buy a house
Or
if they
be
could.
Elon Musk who just wants to rent
Yeah.
and build it, I
Yeah.
mean,
Yeah. Yeah.
it's a totally different extreme.
Right. Yeah. So like in Phoenix, like I kind of think that rent cap sits right around 3,000 to 3,500 a month. Okay. So, and every market's different. So it's hard. You have to really look at your market, but really look at what's listed and what's sitting. So in Phoenix, you could get a $600,000 house that rents for, or $550,000 house that rents for 3,500 a month. And then you can get a more expensive house that's still going to rent for about 3,500 a month, because, if people are starting to pay $4,000 a month in rent, my God, they'll just go buy something, like, so
Yeah.
there is this cap, and you have to be careful of this, because a lot of investors, especially sitting on a lot of money, are like, I want really great tenants and I want a really great place. And I think that if I get this really great home, I can charge 4,500 a month for it and it's going to cash flow. And it's like, yeah, but you can't charge 4,500 a month for it. That's the problem. There's not that many renters that can afford $4,500 a month or whatever it is in your market.
Yep. And one thing that I want to make sure that why, we're going to go back to why you need to work with a realtor that's awesome, knows investing, but is also an investor to what Danille said earlier is because they will also educate you on the team you kind of need to put together to help you expand your team. Because I know we've talked about a team, but the property inspectors, handymans, because guess what? They're using these same people already in their properties to do this. So they can walk you along. And trust me, most investors love helping new investors out, of helping make sure they're going to do it right. I mean, you know, Danille's husband has taught me so much on investing, because I met him back in 2016,
Mm-hmm.
you
Yeah.
know, and he's been able to, over these last, it's been just over 10 years since I met Kenny. And, it's just always so he takes his time and educates. And I've seen him, we'll be out for dinner. Somebody will come up, recognize him, and talk to him. And he's willing to answer questions for people. And that's how, true mentors and true real estate investors that understand the process really work. So, I mean, realtors that are investing we can help you build out your team, because that team is going to be important, especially if you're not going to self-manage it yourself. And to handle all the 2 o'clock calls of a flood of something.
100%. And you bring up a good point, because new investors get really screwed too, because they buy the right place, they use the right realtor, everything's fine, and then they use the wrong contractors. And I always send all my clients my contractor list, so they just have everybody, but not everybody uses them, because maybe they have a company that they like or whatever.
They have a buddy that does
Yeah.
this type of work.
Right. Or they like the one guy that comes to their house or whatever. And so, my client bought this home, and we had the inspection, everything was great. And about 2 months later, she texts me, she's like, we need a whole new air conditioner. She's like, it's a bummer, but and I said, well, the air conditioner was fine. Are you sure? Because it didn't even flag anything. We had the AC company come out, gave it the all clear. Yeah. I said, did you call, my contractor that I gave you? No, I use this other company. And I said, before you have anyone replace the HVAC, I would probably have them come out and look at it. Well, they come out and look at it, $350 part fix. And that's the stuff. Yeah, that's the stuff, right? Because you get screwed on that stuff. Or, your handyman can, do the floors and paint. But if you hire a professional flooring company, it's going to be, 5 times the price, like literally. And so, those are the things that, like, you don't just call on the phone. You don't just look up flooring contractors and call them and then get your floors done. That's what you do in your house. Because in your house, you're like, I want the best. I want, it laid perfectly. This guy has, 500 great Google reviews. On a rental, it's not your house. You just want someone that puts down floor and it looks good. Okay. Yep. Like, you don't need it to be like this perfect brand and this perfect whatever. And, and so, because that's when and you might say, well, I don't want to get cheap work done. Well, you're not, because you're using like vetted people that your realtor is telling you about, but you don't need to use these big companies. A lot of times these independent people charge a fraction of the price, do a great job. And, you lose a lot of money that way. And even when I had my first investment, I didn't have a team. I just bought something and I was paying way too much money, like way too much.
Mm-hmm. So this is why, it's so important for you to build the correct team when you get started into this business, because it can make or break you quickly. And like Danille said, if your first deal does not go great, you're probably not going to do your second and third and have true financial freedom, because that's going to be how you retire from your job. This is how you're going to be able to live and have income coming in when you're not trading time for money anymore.
And I want to touch on something else, Rocky, because people don't ever think of this part, and I know you do, but okay, you have the property, you have the team, you have everything, and now you have to find a tenant. And this is the spot where, if I hear people, they hate their investment, they hate their life, they can't wait to sell it, it's the worst decision they ever made, it's because they put in a bad tenant. Mm-hmm. And so that's where the other part of having an investor that's a realtor comes in, because my investors lean on me of like, what background check do you use? What application form do you use? What do you think about this? What do you think about that? And I give them very clear guidelines and help them kind of find their first tenant along the way, like help them vet them. This is why they are approved. This is why they're not approved. I've had tenants, well, I know he's not like approved on, the forms you told me, but I really think no, like that's where I come in and I'm like, absolutely not, because he doesn't meet the requirements. And you have to have legally, but also for your own sanity, you have to have these requirements. And, that's also where, because if you're just winging a tenant, a lot of investors, I get it. They get panicked. Like, okay, the mortgage starts today. Like, I need somebody in there in the next 10 days. Well, guess what? Tenants that don't have a place to live and can move in 10 days are probably not the tenants you want. You probably want.
They probably just got evicted from someplace because they was trashing something or throwing parties, doing illegal stuff, and now they're like, I have a 30-day eviction notice. I need to get out. Where do I move to now? Who's the next sucker?
And they look for the suckers. They look for the suckers. They look for people that they're like, hey, you don't need to pay for a background check. I actually have one already printed. And you say, oh, that's so convenient. Thank you. And you take that, or you run their background check without checking their license to even make sure that's who they are. And and you do all these things, and they look for you. Like, they're looking for you. That's the thing. Like, they know a sucker, they know a new
And
investor.
they have their own network that they'll run if they get kicked out, they're just going to say, hey, you can get in here with this one because this person hasn't learned any yet. And they're communicating with their network of people to try to keep this racket going.
Yep, 100%. And then you have, so now you've moved in a horrible tenant on day 10. So great. You got security deposit, you got everything. You're like so happy. Well, now you have to evict this person as they destroy your place, and you're just hand over fist piling out money, trying to get them out of there. And, they're wrecking everything and they're awful. And then you've just made the biggest mistake because you didn't follow the process. And maybe it takes 30 or 45 days because a lot of tenants, they have to give a 30-day or 60-day notice to their current apartment. So like a lot of times they can't move in for a month. Well, you're better to wait for them because they're good tenants. They're giving notice to their current place. That means they're in a current place. You can call that current place for, the reference. And now you have these great tenants that, might be there for years, so you just have to you don't want to be in a hurry. Be in a hurry to find a tenant. Yeah.
Think of long-term, get out of your short-term head, because long-term, you'll make up those 2 months of it staying unrented if you can get a great tenant in there long-term.
Yeah, right. And then once you have that one tenant in, you make them give you a 60-day notice. So then you have more time to find that next one. But I just find that when it's vacant, people just start to scramble. And I always tell people, if you're scrambling on anything, scramble on the price. I'd rather you see it drop $200 to try to get somebody in faster than to just take somebody because you just feel like you need to put somebody in there.
Yeah. Well, is there anything else that you want to kind of say to a first-time investor that we haven't really discussed?
Yeah, I would just say slow and steady wins the race. Just be patient. Sometimes investors come in, and if they don't find a deal in a month, they're like just going to buy anything. It can take 3, 6, sometimes 12 months to find the right deal for you. So you just need to be really patient. But also, if you do find a deal and it cash flows and it's in a good area, don't wait to pull the trigger either, because if you don't take it, somebody else is going to take it. So, I think there's a good balance between just not wanting to pull the trigger and then just wanting to buy something.
Perfect. Well, thank you for all this information. How can somebody find you and follow you and everything like that? So please.
Yeah. So if you have Instagram, my name's Danille, DANILLE. So Danille_sells_AZ is my username. And if you want something a little easier, you can also email me at Danille.Elise, ELISE@gmail.
Perfect. Well, thank you very much, Danielle. It was a wonderful conversation. I think for a first-time investor, this is going to be valuable information that they're going to be out there. So thank you again for jumping on. And cowboys and cowgirls, make sure you understand the market you're in. Make sure you find a realtor/investor in that market you're wanting to do. You could reach out to Danille, but if you're in New York, she's not going to be able to help you much back there. She can coach you on what to do and ask realtors, investors. But, if you're here in Arizona, you want to get your first rental property, especially in the Phoenix Metro Valley area, this is the lady you need to reach out to. So thank you very much.
Thanks, Rocky.
And we'll see you guys all next week. Have a good one, y'all.